What if I told you that some of the most desirable cities in the Pacific Northwest, places once thought untouchable, are now seeing home prices tumble faster than anyone expected? In 2025, the region famous for its booming tech hubs, mountain views, and coastal charm is facing a dramatic housing correction. Across Washington, Oregon, and Idaho, families who stretched their budgets to buy just a few years ago are watching values slip by tens of thousands of dollars. Homes that would have sparked bidding wars are now sitting on the market. Sellers are offering concessions, and buyers who were once priced out suddenly find themselves with bargaining power. Consider this. In Bend, Oregon, prices dropped by nearly $140,000 in just 2 months. In Boise, Idaho, values are down more than 10% from their peak. Even Seattle, long considered one of the strongest housing markets in the country, has seen inventory surge nearly 60% as prices fall by more than 3% year over year. The question is no longer whether the Pacific Northwest is cooling, it is where the best opportunities lie. Are you curious which cities are leading this dramatic price reset? From lakeside retreats to booming capitals to smaller towns that once felt untouchable, we are counting down the 15 Pacific Northwest cities where home prices are crashing in 2025. Some of these names will surprise you, and the savings buyers are finding might just tempt you to make a move yourself. 15. Tacoma, Washington. Tacoma has long been seen as Seattle's affordable sibling, offering similar waterfront views and a vibrant arts culture at a fraction of the price. Yet in 2025, Tacoma is experiencing a slowdown that has caught the attention of buyers across the Pacific Northwest. The average home value in Tacoma now sits just under $500,000, which represents a drop of a little over 1% compared to the previous year. While that may sound small, it is significant in a market that saw non-stop appreciation for nearly a decade. Buyers who once felt priced out of this region are now circling back because the tide is finally turning in their favor. One of the clearest signals of a cooling market is the relative affordability of Tacoma compared to its northern neighbor. Seattle's median prices are roughly 50% higher, which means families and retirees are looking south for relief. The difference is not just a matter of a few $1,000s, but of hundreds of thousands saved on single-family homes that often come with more space and larger yards. The gap is widening further as more people decide they no longer need to commute daily into Seattle thanks to hybrid work arrangements. The city's housing dynamics are also influenced by rising inventory. During the pandemic boom, Tacoma homes would receive multiple offers within days of hitting the market. In 2025, buyers are seeing homes stay listed longer, with many lingering beyond the first 2 weeks. That shift gives room for negotiation, a scenario that simply did not exist when bidding wars were the norm. Buyers are now able to request concessions like closing cost assistance or minor repairs, effectively lowering their all-in costs. 14. Vancouver, Washington. Vancouver, Washington sits just across the Columbia River from Portland, Oregon, and for years it has benefited from a steady stream of buyers who wanted proximity to the Portland job market while avoiding Oregon's state income tax. That advantage made Vancouver one of the hottest housing markets in the Pacific Northwest during the pandemic. But by 2025, the tide has shifted. Prices are no longer racing upward, and in fact, the typical home value in Vancouver hovers around $510,000, reflecting a modest decline of just under 1% compared to last year. For a city that once seemed untouchable with constant demand, this dip is an early sign of a more significant cooling. The slowdown is partly driven by affordability fatigue. The average home in Vancouver now costs nearly $500,000, which is far higher than what local incomes can sustain. Families who rushed in during the boom years are finding themselves stretched thin, and with mortgage rates remaining elevated, new buyers are cautious. The result is that homes are staying on the market longer than before, and sellers who once expected bidding wars are now cutting prices or offering concessions to attract offers. This dynamic is creating opportunities for buyers who have been priced out of Portland and other nearby markets. What makes Vancouver especially attractive is that despite the dip, the city retains strong livability factors. Schools are solid, crime rates are lower than in many comparable metros, and outdoor amenities from the Columbia Gorge to Mount St. Helens are within easy reach. Yet the proximity to Portland, which once boosted prices, is now a double-edged sword. Portland has faced population stagnation and declining demand, and that is spilling across the river. As fewer people are commuting into downtown Portland and more companies embrace hybrid models, the premium for being close to Portland is losing its shine. For those entering the market now, this means saving thousands of dollars compared to peak prices. Buyers are also gaining leverage, as sellers have to be more flexible with terms. Even though Vancouver homes still sell in a median of about 2 weeks, that is far slower than the lightning-fast pace of just a few years ago. This balance between stability and softening prices makes it one of the most promising good deal cities in the Pacific Northwest. Vancouver's story in 2025 is not about collapse, but about correction. The city that once felt overheated is now presenting a window of affordability. For retirees seeking a calmer pace of life or families wanting suburban space without Portland's tax burden, Vancouver's market is shifting in their favor. The correction might only be a few percentage points on paper, but in real dollars, it is enough to save tens of thousands and make homeownership more realistic again. 13. Medford, Oregon. Medford, nestled in the Rogue Valley of Southern Oregon, was one of the surprising winners of the pandemic housing surge. Families from California and the Portland metro area rushed in, drawn by the scenic surroundings, warmer climate, and a cost of living that seemed affordable compared to larger West Coast markets. Prices shot up quickly, and for a time, it appeared as though Medford would permanently transform into a pricier, small city. Yet in 2025, the housing market here is going through a sharp correction. The median sale price is hovering around $419,000, a decline of nearly 1.5% from the previous year. While that number may seem modest, it represents a meaningful shift in momentum after years of nonstop price increases. The correction has been fueled by the simple fact that local wages never kept pace with soaring housing values. When mortgage rates climbed in late 2023 and 2024, affordability evaporated almost overnight. Homes that once attracted multiple offers are now sitting for an average of 36 days on the market, giving buyers far more breathing room. The change in pace allows for negotiations, and sellers who once commanded premiums are now accepting offers below asking price. For new buyers, this translates into thousands of dollars in savings and the chance to secure more favorable terms. Medford is also seeing a gradual shift in migration patterns. The influx of Californians that push prices skyward has slowed, and some out-of-state buyers are leaving after realizing the local economy and job market do not always align with higher home costs. That easing of demand, combined with more homes hitting the market, is creating the perfect environment for buyers to step in. Condos and smaller single-family homes are becoming particularly attractive, with price cuts that make them attainable for retirees or first-time buyers who previously felt locked out. Despite these shifts, Medford remains a highly livable city. Its location in the Rogue Valley means residents enjoy access to wineries, mountain trails, and a generally milder climate compared to Northern Oregon. Healthcare facilities are strong for a city of its size, and regional airports connect residents to larger hubs. For retirees looking for a quieter lifestyle without sacrificing amenities, Medford is increasingly appealing because it pairs quality of life with lower entry costs in housing. The housing decline here may be measured in single digits, percentage-wise, but the real story is about leverage. Buyers no longer need to rush into a purchase under pressure. Instead, they can evaluate options, request repairs, and make choices that best fit their financial situations. Medford in 2025 is not collapsing, but rather normalizing. And that normalization means more realistic prices and real opportunities for those ready to make a move. 12. Tri-Cities, Washington, Kennewick, Pasco, Richland. The Tri-Cities region in southeastern Washington, which includes Kennewick, Pasco, and Richland, has often been praised as one of the state's most balanced housing markets. For years, it grew steadily thanks to affordable home values, strong agricultural and energy-driven economies, and a relatively lower cost of living compared to Western Washington. But in 2025, This stability is showing cracks as housing supply has finally caught up with demand. Active listings in June crossed 1,000 for the first time in over a decade, a clear sign that buyers suddenly have far more choices than they did even a year ago. The average sale price in the Tri-Cities is now hovering around $477,000, down from the record high of about $487,000 reached in early 2023. That $10,000 dip might sound small, but in a market that once only moved upward, it represents a shift in the power dynamic between buyers and sellers. Sellers who once dictated terms are now making concessions, trimming asking prices, or accepting offers below list value. For buyers, that translates to immediate savings and the ability to secure homes without the bidding wars that defined the past few years. One of the biggest reasons for this correction is the influx of new construction. Builders, responding to the feverish demand of 2020 through 2022, brought more supply to the market. Now, those homes are arriving at the same time that higher interest rates have cooled demand. The result is a logjam of inventory, giving buyers leverage to shop around and compare options. Families moving from Seattle or Portland are especially attracted, since even after the correction, Tri-Cities homes are often less than two-thirds the price of comparable properties in those urban centers. 11. Coeur, Idaho. Coeur became one of the poster children for the pandemic housing boom. With its postcard-perfect lake, surrounding forests, and small-town charm, it drew buyers from across the West Coast looking for more space, lower taxes, and a quieter lifestyle. From 2020 through 2022, prices soared at a pace that far outstripped local income growth. But by 2025, the tide has shifted, and the market here is seeing one of the steepest corrections in the entire Pacific Northwest. Median home prices have fallen by roughly 4 to 5% compared to the previous year, a striking change for a community that once saw double-digit growth annually. The reasons behind this shift are layered. Many of the remote workers who flocked to Coeur d'Alene during the height of the pandemic have since moved on, either returning to larger metros as companies called employees back to offices, or cashing out of properties that became too expensive to maintain. That outbound migration has added more supply to the market at the very moment demand softened. Inventory levels are rising, and homes that once sold in days are now sitting for weeks, forcing sellers to accept lower offers and even make concessions like covering closing costs. For prospective buyers, these conditions are creating real opportunities. A home that might have commanded close to $600,000 just 2 years ago can now be purchased for tens of thousands less. That price gap matters not only for first-time buyers, but also for retirees who want to downsize into a smaller property near the lake. Condos in particular are becoming a bargain, as the high-end demand that once drove luxury sales has cooled significantly. Buyers who were once priced out of the waterfront lifestyle are finding that 2025 is offering them a way in at a discount. 10. Seattle, Washington. Seattle has long been the flagship housing market of the Pacific Northwest, with tech giants like Amazon and Microsoft fueling relentless demand for more than a decade. But in 2025, the story is shifting. For the first time in years, home prices are not just slowing in growth, they are actively retreating. The median price for a single-family home in the Seattle area is now around $750,000, marking a decline of just over 3% compared to the previous year. For a city where values once climbed by double digits annually, this reversal is a striking signal that the market is entering new territory. Several factors are behind Seattle's cooling. The city has seen a surge in inventory, with listings up by nearly 58% in King County compared to the prior year. Homes that once sparked frantic bidding wars are now sitting longer, and sellers are realizing they must reduce asking prices or make concessions to attract buyers. The return-to-office mandates from some major employers have caused a reshuffling, with families choosing to leave the urban core in favor of more affordable suburbs or even relocating out of state entirely. Combined with persistently high mortgage rates, this exodus has taken pressure off Seattle's once overheated housing sector. The tech industry, which was the engine of Seattle's housing growth, has also entered a period of uncertainty. Layoffs across major companies and hiring freezes have dampened the optimism that once drove buyers to pay extraordinary premiums. Without the constant influx of high-paying jobs, the justification for seven-figure starter homes has weakened. That dynamic is translating into more cautious buyers, reduced competition, and opportunities for savings that simply did not exist in the frenzied days of 2020 and 2021. For new buyers, the correction means real financial advantages. A 3% drop on a $750,000 home translates into more than $20,000 in savings compared to last year. 9. Spokane, Washington. Spokane, once considered the affordable alternative to Seattle, has undergone dramatic changes over the past decade. During the pandemic, buyers flooded into Spokane, lured by its lower home prices, proximity to outdoor recreation, and small city atmosphere. Prices rose at a pace that shocked longtime residents, with some years seeing double-digit increases that far outpaced income growth. But in 2025, this market is flashing red lights. Analysts now rank Spokane as one of the most vulnerable housing markets in the nation, with over a 70% probability of price declines in the coming year. That ranking reflects both the severity of the affordability problem and the speed at which the local market overheated. The median home price in Spokane is still below Seattle's, but it has climbed so much in recent years that it no longer feels inexpensive. Many households in Spokane earn wages tied to education, healthcare, and light manufacturing, and those incomes cannot sustain homes priced at levels approaching $400,000. This affordability gap has created stress for both buyers and sellers. First-time buyers are pulling back, unable to qualify for mortgages, while long-time residents are looking to cash out before values fall further. The result is growing inventory and slower sales, which in turn pressure sellers to reduce prices. Homes that would have sparked bidding wars just 3 years ago are now sitting on the market for weeks. The sense of urgency has evaporated. Buyers today are cautious, aware that waiting just a few more months could save them tens of thousands of dollars. In this environment, sellers are sweetening deals by offering closing cost credits, agreeing to inspection repairs, and in some cases slashing asking prices altogether. Those who move into Spokane in 2025 are finding leverage that simply did not exist in the frenzied days of 2020 and 2021. The city itself still holds enormous appeal. Spokane offers a vibrant downtown, a growing art scene, and access to skiing, lakes, and hiking trails. It remains far less crowded and less expensive than Seattle or Portland. Yet the very lifestyle that attracted so many newcomers has been undermined by soaring costs. Locals are frustrated by the sharp rise in property taxes and higher insurance premiums tied to inflated valuations, and many are choosing to leave the area for smaller towns nearby. That outward movement is another factor weighing on prices. For those with patience and cash, Spokane in 2025 represents opportunity. The risk of further price drops means buyers can enter the market carefully and secure a home for less than just a year ago. The correction underway is painful for sellers but promising for anyone who has waited on the sidelines. If the forecasted declines play out, Spokane could once again become the affordable alternative it was meant to be, only this time with better leverage for the buyer. 8. Sandpoint, Idaho. Sandpoint is a small lakeside community in northern Idaho that became a magnet for buyers during the pandemic. Known for its stunning Lake Pendoré, proximity to Schweitzer Mountain Resort, and year-round outdoor recreation, Sandpoint offered a lifestyle that seemed irresistible to remote workers fleeing crowded urban areas. That surge of demand pushed prices to levels that shocked longtime residents. But in 2025, the housing market in Sandpoint is finally correcting. Median home prices are now around $515,000, which is roughly 6% lower than a year ago. For a town of its size, that is a significant swing, representing tens of thousands of dollars in savings for new buyers. The correction is driven largely by affordability issues. Sandpoint's local economy is rooted in tourism, small business, and service industries, which do not support $500,000 home values for most residents. As prices rose, many locals were priced out, and that imbalance left the market heavily dependent on out-of-state buyers. Now, as mortgage rates remain elevated and demand from distant states like California has cooled, Sellers are finding it harder to move properties at peak prices. Homes that would have been snatched up in days are now sitting on the market for weeks or even months, forcing price cuts that open the door for new buyers. The slowdown has also hit Sandpoint's high-end segment hardest. Luxury homes near the waterfront, which once commanded enormous premiums, are seeing steeper declines as fewer buyers are willing or able to pay top dollar for second homes. Condos and mid-range single-family houses are experiencing softer declines, making them increasingly attainable for families or retirees who want the Sandpoint lifestyle without breaking the bank. That shift in pricing has created opportunities that simply did not exist during the feverish market of 2020 through 2022. Yet the appeal of Sandpoint remains undeniable. The city offers unmatched access to outdoor living, from skiing to sailing to hiking, all within a tight-knit small-town setting. 7. Portland, Oregon. Portland has been one of the most watched housing markets in the Pacific Northwest for more than a decade, and in 2025, it is undergoing one of its most significant corrections yet. After years of steady population growth and surging demand, Portland's housing market peaked in the spring of 2022. Since then, home values have fallen by more than 8%, marking one of the steepest slides among major U.S. metros. For buyers, that percentage is not just a statistic. It represents tens of thousands of dollars in savings on the average home. With the typical house once commanding prices that were out of reach for most local families, today's softer market is providing a rare window of affordability. The affordability strain that fueled this correction has been building for years. Median home prices in Portland rose to levels that were more than 5 times higher than the city's median household income, creating a disconnect that was unsustainable. At the same time, the city's population growth slowed, and in some years even reversed, as residents left in search of lower housing costs and less congestion. The combination of fewer buyers and elevated mortgage rates has left sellers with fewer options, forcing them to reduce prices or add incentives to attract offers. One of the most noticeable changes is in the pace of sales. Homes that would once receive multiple bids within days now sit on the market for weeks. Buyers who previously felt pressured to waive inspections or stretch their budgets are in a much stronger position today. It is not uncommon to see price reductions of $20,000 to $30,000 on listings that linger, along with offers from sellers to cover closing costs or provide credits for repairs. This balance of power has shifted firmly toward the buyer, something that seemed unthinkable during the city's housing frenzy. Despite these challenges, Portland retains the qualities that make it attractive. Its access to the outdoors, vibrant food and cultural scene, and established neighborhoods still draw people from across the country. But what has changed is the price point at which buyers can enter. Condos in particular are seeing larger price drops as downtown demand softens, giving young professionals and retirees a chance to secure urban living for less. Single-family homes in suburban neighborhoods are also more attainable, particularly for families moving from even pricier metros like San Francisco or Seattle. In 2025, Portland is a market in transition. It remains one of the most desirable cities in the Pacific Northwest, but the correction has opened opportunities that were unavailable just a few years ago. For buyers with patience and flexibility, the savings can be substantial. Portland may have shed some of its price premium, but that loss is exactly what is making it a good deal for new residents. 6. Olympia, Washington. Olympia, Washington's capital city, is experiencing a housing market shift in 2025 that would have been hard to imagine only a few years ago. Long overshadowed by Seattle and Tacoma, Olympia attracted attention during the pandemic as families looked for affordable alternatives within commuting distance of major employers. That rush pushed home values sharply higher, but in 2025 the market is correcting. The median home price is now roughly $515,000, which is about 8% lower than a year ago. For a relatively small market, that drop is significant, and it is opening opportunities for buyers who once thought the capital was slipping out of reach. The slowdown is reflected in both pricing and pace of sales. Olympia homes still sell faster than many national markets, often going under contract in just 2 weeks, but that speed masks the deeper shift. Sellers are no longer able to command multiple offers far above asking. Instead, they are facing pressure to cut prices, accept contingent offers, or make concessions that favor the buyer. For anyone shopping in Olympia today, the combination of lower prices and more favorable terms translates into real savings, tens of thousands of dollars compared to peak valuations in 2022. The affordability imbalance that fueled this correction mirrors trends seen across the Pacific Northwest. Local incomes tied to government employment, education, and healthcare have not kept pace with soaring home values. When mortgage rates climbed and the cost of borrowing surged, the math simply no longer worked for many households. As a result, demand cooled quickly. The city's inventory has risen, offering buyers more choices and less competition. 5. Bellingham, Washington. Bellingham, tucked between Seattle and Vancouver, British Columbia, has often been described as one of the Pacific Northwest's hidden gems. Its waterfront, access to the San Juan Islands, and vibrant college town culture have made it a magnet for retirees, outdoor enthusiasts, and cross-border buyers. During the pandemic years, demand surged as Seattle residents and Canadians looked for alternatives, driving prices to unsustainable highs. But in 2025, Bellingham is in the midst of one of the sharpest corrections in Washington. Median home values are down by more than 8% compared to last year, erasing over $40,000 in equity for the average homeowner. This decline is particularly striking because Bellingham had seen such intense pressure from outside buyers. Canadians crossing the border, often armed with stronger purchasing power, helped push up prices for years. That pipeline has slowed considerably as economic uncertainty and stricter lending standards make buyers more cautious. At the same time, locals whose incomes are tied to education, healthcare, and small business can no longer sustain housing costs that crept well beyond regional wage levels. The disconnect between income and home values has forced many to step back, leaving homes lingering on the market far longer than in previous years. Another factor contributing to the downturn is inventory. During the height of the frenzy, homes in Bellingham barely lasted a week before going under contract. In 2025, they are sitting on the market for weeks and sometimes months, especially in suburban neighborhoods farther from downtown. Sellers are cutting prices and offering concessions, signaling that the balance of power has shifted squarely to buyers. For those entering the market now, this means the ability to negotiate lower purchase prices, request closing cost credits, and avoid bidding wars that once defined the experience of buying in Bellingham. 4. Grants Pass, Oregon. Grants Pass, located in the Rogue Valley of Southern Oregon, is experiencing one of the sharpest housing corrections in the Pacific Northwest in 2025. Once a magnet for out-of-state buyers seeking affordability and sunshine, the city's housing market surged during the pandemic as Californians and Portlanders moved in. Median home prices climbed to levels that locals could barely imagine a decade ago. Yet today, the median home price is around $381,000, reflecting a drop of more than 9% compared to last year. For a small city where every dollar matters, that decline is not just a statistic, it is reshaping the buying landscape entirely. Several factors are contributing to this downturn. Affordability has been the biggest challenge. Grants Pass has a local economy centered around small businesses, healthcare, and service industries. Wages in these sectors simply cannot support home values that were inflated by external demand. As mortgage rates rose nationally, affordability evaporated, and buyers who once flooded in from California began pulling back. The result is a market where supply outpaces demand, forcing sellers to make steep price cuts. Homes now sit on the market for an average of 46 days, a dramatic change from the bidding wars of just a few years ago. The correction is being felt across all segments. Single-family homes that were once considered entry-level are now seeing significant markdowns, making them attainable again for first-time buyers. Retirees are also finding deals, especially as downsizing options become more affordable in neighborhoods near the Rogue River. The high-end segment, which attracted remote workers and investors during the pandemic, is facing the steepest declines. Homes that were once purchased sight unseen are now struggling to attract even local buyers, forcing sellers to offer tens of thousands in discounts. Despite the downturn, Grants Pass remains a highly livable community. It boasts a mild climate, abundant outdoor recreation, and a slower pace of life that appeals to retirees and families alike. The city is also well-positioned along Interstate 5, providing access to larger markets without the congestion of bigger cities. 3. Boise, Idaho. Boise was once the darling of American housing markets. From 2020 to 2022, it became one of the fastest-growing cities in the nation as thousands of families from California, Oregon, and Washington moved in search of affordability and open space. Prices skyrocketed in just a few short years, with bidding wars pushing median home values far above what local incomes could sustain. But by 2025, that boom has clearly reversed. The median home price in Ada County, which includes Boise, was just over $524,000 in 2023, down more than 7% from the year before. Neighboring Canyon County saw an even steeper decline of about 9%. Overall, Boise home values are now 10 to 15% lower than their pandemic peaks, wiping away tens of thousands of dollars in equity and creating opportunities for new buyers. The reasons behind the crash are straightforward. Affordability collapsed as prices rose faster than wages, making it impossible for local residents to compete with out-of-state buyers. When mortgage rates climbed, demand fell off a cliff. Homes that once attracted multiple cash offers are now sitting on the market for weeks, and sellers are cutting prices to attract attention. In a striking reversal, some of the same families who moved in at the peak are now leaving, unable to manage rising property taxes and insurance costs. That outward migration has added more inventory, further pushing down prices. For buyers, the shift means enormous leverage. A home that would have sold for $600,000 in 2022 might now be listed for closer to $520,000. That savings of $80,000 or more is not just theoretical, it is showing up in real transactions throughout the Treasure Valley. Buyers are also gaining negotiating power, with sellers offering concessions like rate buydowns, repair credits, or assistance with closing costs. Condos and starter homes, which were once impossible to find at reasonable prices, are again becoming attainable for first-time buyers and retirees. Despite the correction, Boise remains a highly desirable place to live. It offers a family-friendly atmosphere, outdoor access to rivers, mountains, and trails, and a vibrant downtown that continues to grow. Its quality of life remains strong, but the housing market is simply adjusting back to reality after years of overheated growth. The drop in prices is painful for sellers who bought at the peak, but for anyone looking to enter now, it represents one of the best deals in the Pacific Northwest. Boise's story in 2025 is a reminder that housing markets can change direction quickly. What was once the country's hottest market has cooled into one of its best opportunities. For buyers who have been waiting on the sidelines, this correction provides the chance to secure property in Idaho's capital at prices that finally make sense again. 2. Bend, Oregon. Bend, once one of the fastest rising real estate markets in the Pacific Northwest, is now experiencing one of the most dramatic corrections of 2025. Known for its high desert beauty, access to Mount Bachelor, and thriving craft beer and outdoor culture, Bend became a magnet during the pandemic. Families from California and Washington flocked here, driving prices up at unprecedented levels. But today, the city's housing market is telling a very different story. In just 2 months of late spring, the average sales price in Bend plummeted by nearly $140,000, falling from the mid-800,000s to about $693,000. That represents a drop of roughly 17% in less than a single season, the steepest decline in the region. The causes of this reversal are clear. Bend's popularity during the pandemic was fueled by remote workers and retirees who could afford to bid up prices. But that surge pushed housing far beyond the reach of local wages. With most incomes tied to tourism, healthcare, and small businesses, the local economy could not support homes priced at nearly $1 million. Once mortgage rates began climbing, affordability collapsed, and buyers simply stopped competing at the same level. Sellers are now facing a market that is saturated with listings and a buyer pool that is far more selective. Inventory has grown dramatically, with a 5-month supply of homes now available. This gives buyers the kind of leverage they could only dream of a few years ago. Instead of rushing to outbid rivals, buyers are touring multiple properties, negotiating aggressively, and securing concessions like rate buydowns or repair credits. For families, this means saving not just tens of thousands on the purchase price, but also additional money through more favorable terms. For retirees, the correction is providing a rare chance to settle in Bend at a lower entry point, something that had become nearly impossible during the city's peak. The correction has been especially painful for the luxury market. High-end homes that once sold quickly to cash buyers are now languishing, forcing price cuts that ripple down to mid-range properties as well. Even condos, which once offered a more affordable entry point, are experiencing declines as demand cools across the board. Buyers who were priced out in 2021 are finally seeing doors open again, often with the ability to secure larger properties or more desirable locations than they could have afforded just a few years ago. Despite the market turbulence, Bend still offers everything that made it so attractive in the first place: outdoor recreation, scenic landscapes, and a vibrant lifestyle. The difference in 2025 is that the cost of buying into this lifestyle has fallen sharply. For those with patience and readiness, Bend has transformed from one of the most expensive cities in Oregon into one of its most compelling opportunities. 1. King County Suburbs, Washington. The communities that orbit Seattle, suburbs throughout King County, like Kent, Renton, Federal Way, and Burien, are experiencing the steepest housing correction in the Pacific Northwest in 2025. These markets surged during the pandemic as buyers priced out of Seattle proper flooded into nearby towns. The influx pushed values to unprecedented highs, with some neighborhoods seeing prices jump by more than 20% in a single year. But that wave has now reversed, and the correction is biting harder here than almost anywhere else in the region. Median prices across King County have dropped by just over 3% compared to the previous year, while inventory has exploded. With listings up nearly 58% year over year, this surge in supply is reshaping the dynamics of home buying. Where sellers once received multiple offers within days, they are now watching their homes sit on the market, sometimes for months. Buyers are no longer rushing to waive inspections or escalate bids. Instead, they are negotiating aggressively, demanding price reductions, and often securing tens of thousands of dollars in concessions. For families and retirees, this environment creates opportunities to buy into areas close to Seattle's job market at costs that are thousands lower than just a year ago. The correction is not only about rising inventory, it is also about shifting demand. Many households who once sought proximity to downtown Seattle no longer view it as essential. Remote and hybrid work has allowed buyers to expand their searches farther afield, reducing the premium placed on close-in suburbs. At the same time, tech industry volatility has tempered the high-income demand that once sustained lofty prices. With fewer high-salary buyers driving competition, values are sliding back toward levels that align more closely with local incomes. Condo markets in these suburbs have been hit especially hard. Units that once sold quickly to first-time buyers or investors are now lingering, forcing sellers to accept lower offers. Single-family homes, which make up most of the suburban landscape, are seeing price cuts of $20,000 to $30,000 on average. For buyers who waited out the overheated conditions of 2021, these discounts represent a chance to secure space, schools, and amenities at far more realistic prices. The King County suburbs remain highly livable, with good schools, transit links, and access to both city and nature. The difference in 2025 is affordability. With prices down, inventory high, and sellers motivated, this area has shifted from one of the most competitive markets in the nation to one of the most favorable for buyers. For those ready to make a move, these suburbs offer the biggest discounts and the clearest example of how the Pacific Northwest's housing boom has turned into a buyer's market. The Pacific Northwest housing market of 2025 looks very different than it did just a few years ago. Once overheated, markets are cooling, and the dream of affordable ownership is making a comeback in surprising places. From major metros like Seattle and Portland to smaller gems like Sandpoint and Grants Pass, the trend is clear. Prices are correcting, and buyers are finally regaining control. If you are considering a move, these 15 cities offer a mix of lifestyle and opportunity that could save you tens of thousands of dollars compared to pandemic peaks. The key is timing, patience, and knowing which markets are shifting fastest. So what do you think? Would you take advantage of this correction and buy in one of these cities? Or would you wait to see if prices fall even further? Share your thoughts in the comments, and don't forget to subscribe for more insights.